Investing for beginners, lesson 5, what is the actual process? When you're ready to sell, it's a little less overwhelming than buying since you already know the process. Looking at this example of selling a stock through a ShareBuilder brokerage account, you can see that it is very similar to buying. So let's go through the steps for selling. First, set the action to sell. From there, choose the stock that you are selling from the symbol drop-down. Once you choose that, you will have the number of shares box come up so you can enter how many shares you are willing to sell. You also have the option of clicking the Sell All checkbox. Just as with buying stocks, we will go over the different types of orders that you can execute, and we will go over those in the next slide. And lastly, this course has gone over what the bid and ask prices are, but I wanted to point out where the ask price is when you are going to sell, because that is the exact price that the stock is selling at as opposed to the current price, which is larger. Now we will go over the market types for selling a stock. A market order and a market on close order are the same as for buying, where a market order will execute almost immediately as long as the market is open, and a market on close order will execute near the closing price of the day. Now, if you want to sell your stocks or a portion of your stocks, but it hasn't reached the threshold price that you want, then that is what a limit order is for. So say you want to sell your shares at $55, but the stock is currently at $53. You can set a sell limit for $55. A stop loss allows you to protect your investment by placing an order to sell at a specific price below the current price of the stock. So if there is speculation that your stock may be at its high at $40, you can place a stop order at $38 so that once the stock begins to drop, it will still sell at a decent price. This is important because sometimes a stock can begin to drop very quickly and you may not have time to log in and execute a market order yourself. So a stop loss offers the convenience of setting the price to trigger the sell on its own. One note is that the stop loss is not guaranteed to execute if the market is in a volatile state, or it may execute at a lower price than your stock price. So another option is a stop limit. A stop limit combines a stop loss and a limit order. The stop price that you set says that you want to trigger a sell when the stock reaches that price or goes below it. The limit part is placed below the stop loss and will prevent the stock from being sold at too low of a price. So for an example, say a stock could be trading at $70 and you set a stop limit with the stop price at $67 and the limit at $65. You do this because if the market is very volatile, the stock could drop below $67, which triggers the stop price but doesn't get you the stock at that price. You can only get the stock at the current ask price, and stock prices can change almost instantly. The limit at 65 protects you from the stop triggering a sell at anything lower than 65. Another option that your brokerage account may offer you is trailing stops. The examples that we illustrate below are options offered from ShareBuilder. A trailing stop allows you to place sell protection on the stock that keeps up with the rising price. So normally with just a stop order, you place it at $50, but what if the stock goes to $60 briefly before going back to $50? That's a $10 difference lost. Instead, you can set up a trailing stop to try to net a few more dollars. Let's look at an example of a trailing stop. You place a $2 trail amount on a $50 stock. The initial trigger price will be $48. If the price goes to 60, the new trigger price will be 58. So, as you can see, the trail amount keeps up with the rising stock price and will trigger at a higher value without you having to watch the stock as closely. But just a few notes about trailing stops. They're very similar to stops, where you're not guaranteed to get the price at that trigger price in a volatile market. Also, I noted that you can do a trailing stop in a dollar or percentage amount, and it's really just your personal preference as to whether you want to put a dollar amount as the trail amount or a percentage to follow the price more closely. So, just as you have stops and stop limits, there's also a trailing stop limit. And that will protect your investment even further with a trail amount and a limit offset. So as an example, say you place a $2 trail amount on a $50 stock and place a limit offset of 75 cents. The initial trigger price will be $48, and the order will have a limit price of $47.25 if the order is triggered at 48. So this just further protects your investment, just in case, so that you won't get it any lower than $47.25. I thank you for watching this video, and please continue to the next lesson.